This is the Friday, May 16th, 2014 version of the Market Plus segment. Joining us now is Naomi Blohm. Naomi, welcome back.
Hi, thanks, Mike.
You are our native Wisconsinian and therefore our dairy expert. Talk to us a little bit about what we've been seeing in the dairy market recently.
This week we had a really big drop in the milk price, and it was because of cheese prices going lower. When I was here in early April, we talked about how the cheese price was trading at this tremendous premium to the global cheese prices, and that it probably had to come lower, and it happened all within the last 3 weeks. The price of cheese dropped 40 cents, and so milk had to react. And so it was more like a technical correction. It was a little bit of just a fundamental correction also. But also this week we had some news about dairy exports, and they were again new records. And so there's this long-term demand and this export market that continues to be red hot, and it probably isn't going to go anywhere. The dairy producers are responding, and they even did so by this week in the most recent dairy cow slaughter numbers. It's the lowest number so far for 2014. So they're not culling animals. And so even if it's not the best producing cow, they're keeping her around because, hey, the price of milk is good, feed is cheap, and you can make it work. So in a couple weeks, there's actually going to be a milk production report. It's probably kind of like the hog market where it's going to show humongous production. So for now, milk will probably hold $20 in the front month contract, so definitely off the highs of 23. Summer months are right around 19.50. They might go down to about 19. Right now, we feel it'll hold because of this demand situation, but it's just something to be mindful of, because what if the production suddenly on this report is just humongous, and that just catches everyone off guard? So it's a situation where if you were comfortable locking in something, it might be prudent. I would use an option strategy just so that way you can have some upside potential if it's there, and don't be complacent that these prices are going to stay, because something can come out of the blue, and just, what happens if suddenly China just doesn't want to import as much as they did. You never know. But for now, it still is a market that such demand is driving it, but the supply is absolutely there.
Have we seen any sort of a correction in the cheese price since its 40-cent drop, or does it look like we're going to expect it to stay lower here in the short term?
So it had the 40-cent drop. Now we see it trade sideways, and it's matching all of the global cheese prices right now. Okay. So now we'll probably see demand pick up again and build up because everyone is on a fair market value. And then, maybe we see that price move up again overall. So it still is a good market to be in. It really is. Yeah.
Now, and this raises an interesting issue. You talk about dairy cow slaughter being record low. As we look at the beef demand for the choice and select box beef, that spread has been historically tight. If we're pulling a lot of these the older dairy cows out of the slaughter market, should we expect that to maintain tightness? Hamburger cases are going to stay a little pricey for a while, it would look like.
Yeah, I would agree. And so it's something to keep in mind, but I think you hit the nail on the head.
Okay. Well, now let's take a couple of our questions from some of our viewers on Twitter and Facebook. And we've got a lot of concern about weather. Surprise, surprise. It's planting season. It's been cold and it's been wet for a lot of people. Jay in Mason City, Kyle in West Central Iowa, and Shannon, who we mentioned on the show, are all concerned. Are we in a weather market on the corn side here? How is the trade taking into consideration the weather that we're in currently?
It's in a holding pattern where I think the traders really understand the importance of weather, but because it's a little too soon to get overly excited about it, they're not reacting to it yet. But the thing with the corn, too, is that the USDA, between the March planting intentions report and the June report, if you look back at 34 years, 19 years between the March and the June report, they increased acres, and then 15 years, they decrease it. When they increase the acres, they increase it by 1 percentage point. If they decrease the acres, it's always by about 2 percentage points. So when you have Minnesota, North Dakota, Wisconsin, even though we don't count, Michigan, not planting, maybe we start to see that number for June go on the decrease. So if that happens along with the weather, it sets it up for a more friendly corn price. So it's nothing where we say necessarily totally $6 corn yet, but like I was saying earlier, it takes it from $5 to $5.50 pretty quick. So something to really keep in mind.
We find a little bit more strength there. Yeah. And that leads right into Phil in Ontario's question is, and this might be a little premature, what is your estimate on the final U.S. corn acres, and how do we expect this to impact ending stocks and subsequent prices? Prices higher, potentially.
Yeah, ask me in 2 weeks if my guys in Minnesota and North Dakota are complaining, and, rightfully so.
Sure.
So in 2 weeks, I think we can have a better assessment on that, but, a lot can happen in the meantime.
You bet.
It's a very good question.
We're holding currently.
Yeah.
All right. Here's a question that a lot of times we get asked by people who are curious, and I'm sure you've gotten asked before. Matt on Twitter is curious, why do so many advisory services push options? What's the advantage to trading options versus a straight buy or sell on a future side?
It boils down to risk tolerance primarily. We've done educational workshops with producers, and if you have a room of 100 guys, and you ask them risk tolerance through a series of testing questions that we have, maybe at the most 10 people in the room have the risk tolerance for futures. So therefore, sometimes you start the conversation with the options instead. And so depending on your risk tolerance, that's a great place to get started because there's so much flexibility, there's so much time you can do with it, you can make it in your budget, you can make it so that way you have a strong rate of return so it acts like a futures contract. So there's so much more flexibility with it. So it's just a great tool to be able to use.
All right. Now, we also didn't get a chance to talk cotton on the show, and we are still seeing cotton sell off. What are your thoughts on this cotton market as we roll into this next week?
Yeah, the planting price is just a little bit behind the 10-year average, but not out of whack really yet. And so the new crop is on the defensive because on this last USDA report, it's the 4th year in a row that they've raised the global ending stocks. So that keeps the new crop on the defensive, but yet the old crop situation still is tight, and so that's why you see the old crop price a little bit higher. Going forward, probably see cotton trade range bound right now, and then we just take a look, of course, at weather and then at global demand, but not looking for any big moves there for now.
Okay. All right. Now, Naomi, before we let you go, we do have a couple of questions for you as part of our new initiative called Market to Market in the Classroom. Mm-hmm. And we're asking our analysts to share some insights on what do you do to prepare before you come on Market to Market? And right now, these are on the Market Plus website, and before long, they will be on the Market to Market in the Classroom website, so anybody can log on there and check them out as well. So, Naomi, what are your sources of data for your recommendation?
That's a great question. My primary source is the Newswire, and so if you're not quite familiar with what that is, you can, sometimes DTN would have it or a service like that, and then it just tells you what's happening around the world in every single aspect of the market. And I go there first because it's just the news and it's primarily unbiased and I can just read the facts. From there, though, I absolutely read different advisory services that are out there. I like to hear other people's opinions on things. I look at probably 3 or 4 of them every day. So I take a look at things in the morning, I read things at night, and then also I watch and track basis around the country and see what the actual cash market is doing, because a lot of times the cash market will tell the truth about what's actually happening out there. So probably at least 10 different resources I'm looking at continuously.
Now, how do you manage to track basis from around the country?
There's a few different websites you can go to. Sometimes you have to pay, sometimes they're free. What I'm doing for one producer right now is I've actually called about 20 different elevators throughout the Midwest, and I got on their bid sheets. And then I'm manually tracking it through an Excel spreadsheet program and keeping an eye on it that way. So time consuming, yes, but boy, you get a good picture of what's going on.
Certainly. All right, and then our second question is, what factors can influence a particular commodity?
It's so much different than years ago. It used to be a lot easier. So now what the factors are, it's the global marketplace from the standpoint of what crazy person in the world is behaving even crazier. It's global economic factors, so what's happening in China matters, what's happening in Europe matters. The fact that Europe is probably going to ease their monetary policy very soon absolutely affects what's happening here. It's things like the funds and keeping an eye on what they're doing. It's traditional supply and demand fundamentals, and there's probably 7 or 8 things that you just have to be aware of at all the times. And at any one time, one of those activities can just trump everything. And just when you think you're so smart and you know what you're doing, this one goofy thing comes out of the way, and then you're just humbled. So that's about it.
And on that note, thank you, Naomi Blohm, for taking the time to be with
You
us.
bet.
We appreciate your insight. And thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we'll continue to get expert analysis straight to you. Thanks for watching, and have a great week.